Hey everyone, welcome back to Fiscal Voyage. My name is Felix, and today's video we're going to talk about a stock that I've been holding for the long term for the past, I would say 5 years or so, 4 years, 5 years, and I sold shares of it, kind of break even-ish, maybe around 2% of gain, but a lot of dividends throughout the years. And I'm going to show you why I sold the position. And the stock that I'm talking about is 3M. So 3M had earnings and they had a monster day on Friday, where it jumped up almost 23 over 23%, 25% in one day, which is outstanding. So I'm gonna show you my sell here. You see here I sold all my 90 shares, sold out of 3M for 127. 24 cents, so about 11 grand. This is not including the dividends I received throughout the years. And you can see here, this doesn't go far back, but because Schwab and TD Ameritrade, or Schwab bought TD Ameritrade, so some of the transaction hasn't been transferred. But you can see here, I bought position shares at eight shares at 145, and then 4 at 130, and then 4 at 113, some 10 at 116. So I've been averaging down because it is a tremendous company. 3M, strong history. The product is everywhere. I used it. I'm sure you guys have stuff in your house that you use it. It's everywhere, like in Home Depot and Lowe's. So their product is everywhere. So I would love to buy this company again, but I took this opportunity that on Friday to sell out because I wanna it's gonna drop back down, hopefully to around $100, and that's when I'll start opening a position again. I just wanted to clear out that what I had because I was under for a while, and I was still holding it even after the dividend cut, and even after it got down to $80, because I know long term this company is outstanding company. They use the product is used everywhere, so I had no problem holding it for a recovery like yesterday. And so now, since I took advantage of the sell, so I would now take advantage when it does a pullback, hopefully to the $90 to $100 range, and I'll show you why. So I sold shares, and I'm going to tell you why I sold shares. So we go to first to some of the analysis from Morningstar and CFRA. You can see here Morningstar gives it a 2-star rating. Last price was 103. Obviously it didn't update to 127, and it had a fair price of $89. So you can see here with a 2-star rating, and I kind of agree, fair price is around $90, $100, and I'll show you why more with fast graph. But this is why I sold, because of this. You can see here, so it's overvalued now, and CFRA gives it a 4-star rating with a price target of 140, but I think that's too high. They don't give you a 3-year projection, and they don't have a fair price. They just have a price target. It's different from their fair price. But if we go to fast graph, you can see here fast graph expect the company to earn $7.21 for 2024 and $7.81 for 2025. So I knew earnings was going to pick up going forward. That's why I had no problem selling. But now you can see here the stock has jumped overvalued around 17, even though it tends to trade around an 18 PE. But this is a different company now. They spin off part of the company. They have this legal issues and things like that. Obviously they're clearing all that out, and then now they're starting to look like a growth company. But the growth is not 15%, 20% to warrant such a huge jump like that. So I think, and I'll show you technically why I think it's going to be a pullback, hopefully by the end of the year or next year, and that's when I'll jump in. So you can see here the fast graph, earnings is just about 1.89, and forecasting, you can see here they're only forecasting 4% growth, so it's already overvalued here based on the forecast. Long-term growth, you can see they're expecting a negative growth here by 3 analysts. The scorecard is pretty accurate. You can see here it hits it. 3M hits the analysis prediction pretty accurately. So this is all the reasons why I sold shares. And then the next reason, you can see here on the analyst technical chart, this is a 3-month closing price of 3M, and you can see here The 3M kind of respects this moving average, the 50 moving average. You can see it kind of it went under it, but this was 0809, so a lot of stock went under it. But this here bounced here. You can see here, kind of around here, got near it. It bounced here, and then it bounced here during the COVID crash. Gave you a sell setup, and then now what I think is gonna happen is that this here, this area, 130 area, maybe possibly 140. It's gonna come back, give us a pullback up to this $100 area range, and this is where you're gonna buy shares of this company after the 30-day waiting period. Normally, when you sell shares for a profit, you gotta wait 30 days before buying it back. So if it gets back to $100, this is where I plan to buy shares. And if I don't buy shares at 100, I'm definitely gonna sell puts. You know, $90 or $80. You can see here strong support around $80. And matter of fact, this is kind of like the UPS thing. You can see here, right here was resistance. It broke, and then it came back to resistance. Now it became support. So $80 was a great buying opportunity to buy shares. So those of you who were lucky to buy at $80, that's a great buy there. And then but that's what I'm kind of hoping for, you know, with this moving average here on the 3-month, this 50 moving average. I expect it to kind of put a resistance, put up a fight here, 130, bring the stock down to maybe around $100, either sell some naked puts at $90, or even just open a small position of at $100. Maybe instead of 90 shares, open with 4 grand, 5 grand there as a starter position, and then see what happens. And if it gets lower, just buy more shares and just keep averaging down, like what I did before. But this kind of the main reason why I sold 3M is because of this here, the moving average, the 53-month moving average, as well as the analysis that we talked about with Morningstar and CR4A, and of course Fast Graph. And you can see here throughout the max, this is basically a new company right now, and because of the huge dividend cut, and all the spin-off and things like that, so it's a different company now compared to here. So before, it asked for a high valuation around 18. Now I think it should be asking around a 15 or 16. So it's kind of, to me, is a kind of little overvalued at the current price, and this is why I sold out. And you can see here on the daily chart, what a move on Friday. This is it consolidated. It reported earnings. You can see here it surprised earnings by 14% in earnings, and revenue grew 2.8%. So this is what drove the stock, and they gave good forecasting for the year. So this is what drove the stock higher. You can see there's a huge bar. Obviously it could go up a few more times, a few days, or it could just give it all right back and close this gap, because this is a gap now that the orders are here. So it eventually needs to come back down here. And when it does come back here, this is where I plan to, use the opportunity to buy shares right into this $100 resistance area here, 105. So it'll bounce here, 105, and then head higher. Kind of what I talked about earlier in the 3-month. So I expect it to, it could probably go higher, but I expect it to, pull back, close this gap, and then head back higher. But that's when I would buy shares of this. You can see here the 3-month on this side here on the left, top left, hitting that 50 moving average. That's why I bought sold shares. So what I did with those sold shares is I'm transferring it to my interactive broker, because the interactive broker gives you about 4% in interest on your not used cash. So I kind of have it there waiting for opportunity, because the stock market had a great day on Friday overall. You can see here, this is my portfolio here on Sinking Alpha. BNY had an update. A lot of stock had a huge update on Friday. 2%, 4%, 11%. 3M 23%. So right now I'm kind of like holding. I did buy shares of UPS on Thursday, so that's good. So took advantage of the nice 2% increase that UPS had. But overall, that's what I did on Friday. Sold shares of 3M, and I will get back into it once around that $100, maybe a $90 area. You can see here the fair price here based on Morningstar at 15 PE is around 110, 115, 120. So this is why I think it's overvalued currently. Again, this is a new company. A lot of things need to be shown first before I get back in. But thank you guys for watching, and if you're new to the channel, make sure to hit the like button and hit the subscribe button as well. And I'll see you guys on the next one.